Okay, so let's say you get through this course and you decide that you want help. You decide that there's a whole bunch of information here and you don't want to go it alone anymore. Here is my offer to you. I will refund you the entirety of the. Okay, so before we go into the details and all the lessons and how to negotiate with a bank and a broker and how to find lowest interest rates, I have something to ask you. I have a favor to ask of you. You've all heard of a Karen, right? That's the recent thing that everything's going on. I hate this because my mom's name is Karen and she is the nicest person ever. She would never go into a restaurant and complain. But we all know that Karens are people who complain. That's kind of the connotation now. That's the new slang, the new terms, and be what it is. Karens are Karens. Don't be a Karen. Well, my request for you as you go into this course is don't be a Richard, because a Richard is much like a Karen, somebody who complains, so on and so forth, but more specifically a Richard, and you all know what the short term for Richard is, right? Dick. Don't be a dick. A Richard is somebody who goes out and gets 4 or 5 different mortgage brokers, a couple different bank mortgage specialists working on their deal with the expectation of not completing it with most of them and only completing it with one of them. Because here's the problem with going out and shopping around and applying at a whole bunch of different places is every time you apply, that causes somebody to have to do work. And if you're causing them to do work, what it means is that they've got an expectation that doing the work for you is going to earn them an income. And if you're one of the people who goes out and applies at 5 different mortgage brokerages, that means you're going to have 5 different mortgage brokers doing work, and they're all going to have that expectation of earning that income. And then eventually you have to choose one of them to deal with. And that means 4 of them aren't going to get paid. 4 of them aren't going to earn an income. And this is like one of those unique industries where in the mortgage world, for whatever reason, somebody doesn't get paid until the deal is done. And they can't charge you like a lawyer can. They can't charge you like a doctor can. They basically do the work for you, go out, try to find you the best mortgage. Then they get an underwriter involved, an appraiser involved, a document review person involved, a funder involved. They get 4 or 5 people involved. All of them are trying to help you. And then if you at the last minute are saying to them, oh, I've decided to go elsewhere, well, guess what? You've been a giant Richard. So take this information that I'm going to give you. Go ahead, shop around, get the best deal that you can possibly get. But when you apply for a mortgage, only end up applying at one place. If you are trying to get a mortgage and someone says, hey, I can't even quote you an interest rate until I get an application, well, just move on, go elsewhere, find somebody who will give you a quote and kind of a best guess of what they can get you for an interest rate, apply with them, and basically find somebody who is acting in good faith with you and that you feel that you can trust, and just get the job done with that one person. Don't lead a whole bunch of people along. It is the absolute worst thing you can do. And it absolutely sucks that people do this. They apply in different places. We've had this done to us recently a bunch of times. Just don't be that guy. Don't be a Richard or a Karen. Of the amount that you spent on this course, I will also give you $500 towards. Okay, so let's say you get through this course and you decide that you want help. You decide that there's a whole bunch of information here and you don't want to go it alone anymore. Here is my offer to you. I will refund you the entirety of the amount that you spent on this course. I will also give you $500 towards any sort of expenses you have, whether they be legal fees, whether they be appraisal fees, or just cash so that you can go out and hire movers or buy some furniture. So if you decide that this is just too much and you want professional help, I'm totally there for you. I'm totally willing to help. After your deal funds, I will absolutely 100% refund the entire cost of this. And I will make sure that you get exactly what you need, the information you need, the mortgage that you want. Let's call a spade a spade. Any broker can get you pretty much any offer that's out there in the market at any given time. We have our ways to get pretty much everything that is available. So if somebody offers you something, but you don't feel like you can trust them, you don't feel like you want to go forward with them for whatever reason, I know I just said in the last video, don't be a Richard, but if for whatever reason you decide that you want my help, I 100% unequivocally have your back, and I will not only refund the cost of this course, but I'll also give you that $500 for your trouble to make sure that you've got a little bit of additional spending money in order to do whatever you want to do with it. Okay, so let's dive into where to find the lowest rates. So what I'm going to show you is where you can search to find out what the lowest rates in the market are at any given time. So this information is invaluable because basically what it allows you to do is go ahead and compare what's available on the market to what other people are offering you. Now, you may decide that you want to use one of these companies. You may decide that you want to use more of a full service brokerage like Mortgage360, the one that we deal with. Or you may decide that you just want to use the rates that you find as leverage with the people that you are already dealing with, because sometimes you already have a broker, sometimes you already have a banker, and sometimes you want to continue your relationship with them. However, you want to make sure at the same time that you're getting the absolute best deal possible. So if you want to do that, I'm going to show you exactly how. So what I'm going to do is I'm going to jump over here and we're going to go into Google Chrome. And all we're going to do is we're going to Google a really simple term. Lowest mortgage rates Canada. And what you'll see is that you've got a whole bunch of advertisements that come up here. And these aren't necessarily what we're looking at, although sometimes you'll be able to find really low rates in the advertisements. But what we're really looking for here is we're looking for two different websites that I find to be pretty reliable in finding out what the most competitive rates are in the market. They are ratehub.ca and they are ratespy.com. Now, we know the owners of ratespy.com. Ratespy is probably one of the biggest amalgamators of interest rates in the country. Ratehub.ca used to be, in my mind, in that number one spot of the most competitive place to get interest rates. They have their own broker now. They used to sell leads to brokers. Now they have their own brokerage. So one thing that you should note is that most of the time, the lowest rates that you find on ratehub.ca are going to come from a company called CanWise, and they are owned by ratehub.ca. Now, if you click into here, basically what you'll be able to do is you'll be able to take a look and see what all the lowest rates are in Canada. Now, this is really super simple to use. They've really organized it well. So if I want to go and take a look at 5-year fixed mortgage rates, I just click into there. And one thing to note is that rates are different based on how much you're putting down for down payment. So what you want to do is actually click into here and put how much you're going to put for down payment. So at 5% down, it's an insured mortgage. That's typically going to get me the lowest rates in Canada. As you can see right now, 1.74%, that's a discounted mortgage rate. But if I increase my down payment to 20%, what you'll notice is that these interest rates change, and you're going to pay probably a little bit of a higher interest rate when you're putting 20% down. And then when you start getting back up to 35%, what you'll notice is the rates typically will come back down to where they were if you had an insured mortgage. Because what happens is when you're getting a mortgage with insurance, that is the mortgage that has the least risk for the bank, and therefore they are going to price it the most competitively. So in other words, if you're putting less than 20% down, you're probably going to get a lower interest rate. At 20% down, that becomes the most riskiest mortgage for the bank because that is the one where they don't have mortgage insurance. It's their highest exposure on a mortgage. And then when you start getting down to 35% down, that's where the risk starts to level out for the bank. They don't have insurance, but the chances of somebody walking away from a 35% down payment are very, very low, statistically speaking. So that's where you start to get back into lower interest rates. Now, you can go and you can take a look in here. You can see what the fixed rates are. You can see what the variable rates are, 1.3%. This is actually a little bit high right now. I know that there's better rates out there than that. So not always the most reliable thing, but definitely something that, this is a good place to start if you want to figure out what the lowest interest rates are typically in the industry. By the way, it's interesting that you have this 1.45% rate and a 1.25% rate. Typically, the people that are offering this super low rate, it is MCAP, and it's usually what's called their value flex mortgage, which I'll talk about a little bit more when we get into discount mortgages. But typically, it actually is an MCAP product that is priced at 1.25% when you see that lowest interest rate. If we go back here to our original search, the other place I was talking about that I would always check is Rate Spy, because here's my guess. My guess is that when we start to get to, this is not quite as easy as RateHub to use, but you can see that they have other rates in here, like they have the HSBC rate that's a promotional rate right now. So sometimes you'll find some things at Rate Spy that aren't necessarily deals that Rate Spy can offer, but are rates that that they've gone out and found in the industry, that, you know, probably a little bit more transparency here than let's say at RateHub is what I'm trying to say. So really good place to go and take a look. If we go and we take a look at our current best rates for a 5-year variable, this is what I was talking about in the fact that there's lower rates out there. 1.2% is what it said at the beginning on the other page. Now it's saying 1.24, 1.25%. IntelliMortgage, this is Rate Spy. The company that owns Rate Spy is IntelliMortgage, or vice versa. I can't remember which owns which, but that's the same company here. Butler Mortgage is another one that's popular in the low interest rate space, so I'd always check there as well. But you know, you check ratehub.ca, check Rate Spy, check Butler Mortgage, check True North Mortgage, and that's typically where you're going to find the lowest rates. Now, the thing you have to remember is those mortgages often come with restrictions. They often come with different penalties. They're discount mortgages. They aren't full featured mortgages that you'd get at a First National or a Scotiabank. Sometimes they are, but most of the time they aren't. So what you really need to know is if you're looking for that super low rate, that ultra low rate, you need to do some digging into what actually comes with that mortgage. And not only what comes with it from the perspective of features, but also what comes with it from the perspective of restrictions. Okay, so let's discuss positioning yourself for the best deal, because there's some things that make getting the best deal easy, and there's some things that are just going to automatically exclude you from getting the best deal. So when you go into your bank or your mortgage broker, you want to come prepared. And what you want to have is you want to have your credit, your income, and your down payment ready to go. And I don't mean I want you to bring your own credit bureau, because the bank and the broker are going to have credit bureaus that they have to use. But what I want you to know is that you need to have a good credit score. You need to have your income stuff all figured out. And when it comes to credit, what you need to know is that if you're going to go and get a mortgage and you're going to call a whole bunch of places and say, what's your best rate? And then at some point you're going to tell them, oh, by the way, I've only got a 560 or a 570 beacon score. Well, guess what? You don't qualify for the best rates. So part of getting the best rates is being a well-qualified borrower, which means you got to have great credit. You want to have a good job, and you want to have a good source of down payment. Those three things will make it easier for you to get the lowest interest rates. Now, you want to know your approximate credit score. And anything over 680 is good. How do you find your approximate credit score? Well, one, you can go to Equifax directly. You can go to TransUnion directly. You can buy their services. They often come with credit monitoring, which is a good thing as well. Or you can go to companies like Borrowell, Mogo, Credit Karma. Those are companies that will give you your credit score for free. Beware though, they are probably going to try to sell you a credit card or some other sort of financial product. So there is a catch to getting your credit score for free. And the third place, and probably the best place to get a feeling for your credit score, is through your online banking and your online banking apps, because most of the banks have access for you to get your credit score for free through them, through either TransUnion or Equifax. Now, your actual credit score is likely going to be higher than the one that you have access to. So our experience is when you get the free credit scores from your bank, or you get the credit scores from TransUnion or Equifax or from Borrowell or Credit Karma, most of the time your score is actually higher than what those companies will tell you it is. Because what happens is when you're getting a mortgage, you use what's called a Beacon 9 score. And that's the most advanced scoring system when it comes to your credit. And quite often, like I said, your credit score will be higher with when you actually get your credit bureau pulled than by the mortgage broker or the bank than it was with the free credit score reporting. But you want to use that free credit score reporting as a tool in order to determine if, yes, you will qualify and if you will get the best interest rates. And if your credit score is low, find out why and try to make it better. Easy ways to improve your credit score with respect to when your score is lower than what you think it's going to be is to pay off any balances, get your actual used amount of credit to available amount of credit ratio low, make sure none of your balances are over limit. Those sort of things will bring your credit score up pretty quickly. Now, if you want to do further research on this, just go to my YouTube channel. There will be some videos on credit score there. Those will definitely be helpful. Now, you want to have your job letter and your pay stub ready if you're an employee. If you are not an employee, you're going to want to have tax returns, notices of assessments, business financials. But if you're an employee, you work for a company, you're going to want to have that job letter and pay stub ready to go. Job letters provide your position, your tenure, and your salary. So your position, how long you've worked there, and how much money you make. And like I said, if you're self-employed, you'll need those 2 years of tax returns, notice of assessments, and business financials. 2 years is really important here. You are going to need 2 years of history, and what they'll do in order to determine how much you qualify for is they'll use an average of the two, assuming that your income is increasing. Then you're going to want to have 90 days of bank statements showing your down payment accumulation. Now, this can be RSP statements. This can be bank statements. This can be TFSA statements. Basically, what you need to show is where the money came from that you're using for your down payment. And the reason this is so important is because there are anti-money laundering laws that require the bank to do due diligence to make sure that the money is coming from legitimate sources. Now, you don't have to have the money in your bank account for 90 days. Let's say you're accumulating it and you get a paycheck or a bonus, and that's only going to be 10 days prior to your closing. That's totally okay. What they're looking for is just to know exactly where the source of those funds were. If it's been in your account for 90 days, you don't have to prove where it came from because the bank has had the time and the ability to do the due diligence on it to make sure it's from legitimate sources. Now, if you're getting a gift, all you have to show is the deposit and it going into your bank account. That can happen a couple of days before your actual possession. But you want to make sure that you have these down payment documents ready to go, because the easier you can make it for the broker or the lender, the more likely they are to try to help you and get you a lower rate. Now, one thing to note, and one thing that we see frequently, is we see people moving money around between accounts for no apparent reason. I'm going to tell you right now that the least amount of statements, the more you can limit the amount of time it takes for a broker or a bank to go through and verify where your down payment came from, the better. So try not to move money around a whole bunch of different accounts within that 90 days before you purchase a house. It just makes it easier for everybody. And ultimately, your goal here when it comes to documents and whatnot is to make your deal a slam dunk for the lender. You want to have great credit, easy to verify employment, easy to verify down payment. And if you can accomplish those things, getting the lowest interest rate is definitely going to be a lot easier than if you've got bad credit, or you don't have a job, or you don't have an easy to verify job, or you don't come with your documents prepared and ready to go.